there, welcome to Closing Trades right here on ET9 and the Mumbai News Centre. I'm Tanveer Gill with my colleagues Aisha Freedy, Siddharth Bhamre and Nikunj Dalmia joining in from the Delhi newsroom, and we are stepping into the last hour of the penultimate session to the big budget event with a bit of caution on the street. It's, still sideways, I would say, just shy of 11,000, so we've broken below that mark, but I don't think this is a conclusive breakdown. What's concerning, or rather disconcerting right now, is what's happening with the mid caps and the small caps, because we're seeing about 1.5% to 2% kind of losses there, and that unwinding pressure continues. I think in the internals also, as we step into the last 60 minutes of the session, the data points are indicating that the street is cautious, because there was a fair amount of froth that is set in for the broader market. But Siddharth has been analyzing the trends, and he joins you with his insights.
Yes, Tanveer, we are seeing, market bit under pressure. We are seeing Nifty around, 35, 40 points down, and then, it increased to 50, 60 odd points. Bank Nifty is also down, but outperforming, and that is because some of the private sector banks doing well. If you look at the list of gainers, then you will see it is mainly banks which are higher, and then some of the other stocks which you can see on your screen right now. In the loser segment, you have pharma stocks, some of the PSU names which are not doing well. That's clearly on your screen. Metals stocks are also, showing some softness at this point of time. HUL, Infosys are some of the names. Now look at the contribution. Even if private sector banks are not top of the gainers, but see the contribution, and that clearly highlights their weightage and their strength. Reliance Industries is doing well, but what is dragging Nifty down is ITC, Infosys, because of their weightage. Contribution is done, but this is a complete U-turn. We were talking about how market breadth was good, but after 40-50 points fall in Nifty, it has completely changed, and now in line with what we have been seeing since last 5 to 6 trading session. We have identified some themes which we didn't speak about in morning. First one is PSU banks. We are seeing decent amount of correction and huge formation of short position, which I mentioned in morning as well in PSU banks. Bank of India, Can Bank, OBC, we were discussing in detail that how these stocks are going down, breaching their support levels and adding short positions. Infrastructure space, especially mid cap and semi large cap, has taken completely U-turn, just the way market breadth has taken. Morning we were discussing about these stocks doing well, more or less same stock correcting now. Reliance Infra, NCC, IRB Infra, these are the names which are correcting. But stocks which matter are private sector banks, and they are doing well. They are clearly emphasized that FIs are still buying in this market, and you can see on your screen HDFC Bank, IndusInd Bank, Kotak Bank, all doing well and in green.
Oh yes, indeed. But what's at play is the fact that you have the mid caps which have come off, and I think the last weekly performance or the last 7-day performance of the mid cap and the small cap index will try to capture the kind of unwinding pressure that the broader markets have witnessed. Not completely unplaced or not completely misplaced at this point in time, because last year the rally in mid caps and small caps was fairly stunning. And so, Nikunj, stepping into trade, how are you looking at the market's performance today? We're down about 3% in the last 7 sessions for the mid caps and the small caps, and it seems like while the large caps are holding out, the market has its own mind ahead of the budget event.
See, frankly, the sell-off today, Tanveer, I don't think is largely because there is a massive unwinding which is happening because anybody is expecting any change in the taxation structure. I mean, if that was the theme, then trust me, a lot of large cap stocks would have also fallen down. Markets were due for a correction. The small cap index for 2017 was up by about 65%. Now, mean reversion, I guess, is the biggest tourism in the market, and somewhere mid-cap prices were completely dislocated. With the exception of cement, a lot of mid-cap stocks, with the exception of cement sector, for all other major sectors, mid-cap valuations were actually higher than the large-cap valuation. And what was justifying this? It was liquidity which was really justifying this kind of an preference. Also, a lot of mutual funds were actively buying mid-cap stocks because they were getting inflows on a daily basis. But now a lot of mutual funds are either advising their clients not to buy into mid and small cap funds, or they've really stopped accepting inflows as well. As a result, there is a vacuum which has got created, and the demand now in mid cap, which was insatiable, seems to be drying up. And on the other side, you've got large cap stocks, Asha, where flows are strong, where earning visibility is strong. 4 out of 10 Nifty companies have managed to beat the estimates when numbers have come out today. So it is something which really be called as a transition period in the market. The leadership is changing, large cap stocks are bouncing back, the earning projections are changing, a new profit cycle has started, a new growth cycle has started. It is all tying in very beautifully with where the earnings and where the macro picture of the country is shaping up.
Yeah.